The One Big Beautiful Bill was passed over the summer, and while we're still kind of ironing out the details and what the forms are going to look like and really how all of these details of the tax reform are going to impact taxpayers, we do have guidance already for what taxpayers can do right now. Now, there's a lot of information about the specifics of this tax reform. It's quite large, it covers a lot of ground, and many parts of this One Big Beautiful Bill, or the OB3A, sometimes you'll hear it referred to as that, many parts of it are really just continuations or extensions of the tax reform that we saw back in 2017. So that was our Tax Cuts and Jobs Act, or the TCJA. So Congress made permanent a lot of those pieces. So you can find a lot of information on this bill. For now, you've got a few strategies that you can put on your radar that you can actually do now before the end of the year and hopefully minimize our tax burdens. So one area of OB3A is there's enhanced deductions and tax credits. Now, we're seeing a continuation of those larger standard deduction amounts. So those are still available for taxpayers for 2025, and they've been adjusted for inflation. So they're still quite large. And we're also seeing expansions and additions to credits. So you'll see like child tax credit and things along that nature. There's quite a few where they've actually been increased. And the income ranges for phase outs and we'll say eligibility, for many of them, they're still quite high. It certainly depends. We'll have to look at those, but they're still quite high. So what this means is that more and more taxpayers are eligible for these higher deduction amounts and these bigger tax credits. Now, another area we've seen some potential for strategy is around retirement. And one part of the OB3A is the addition of the Trump accounts. So you'll see additional potential retirement accounts that we can't quite set up yet, but they're still in the works of ironing out the details on that one. And because tax rates are lower, that was also made permanent from the TCJA. So a continuation of these lower tax rates, where the highest is going to be 37%. Along with that, we have to come up with strategy, income strategy specifically. So it might be a good time to go ahead and have more income. Maybe it makes sense to go ahead and have additional distributions, for example. So it certainly depends on the taxpayer and their situation. But that's an area where the tax rates along with retirement strategy can work together. Now, senior deductions is another area, and there's additional enhanced senior deductions. So we have a higher standard deduction, and then we have an extra, we'll say, adjustment to income for seniors 65 and older. So that's a new one that will significantly reduce the tax impact for seniors on their 1040s. And then business. Now, we saw a lot of change with business. For most small business owners that I work with in this region, in Virginia and Tennessee, we're still seeing the continuation of that Qualified Business Income Tax Deduction, or QBID. And if you've been a small business owner for a while, it's that extra 20% for most business owners. Now, certainly exceptions, but a lot of business owners have gotten used to getting that 20% additional deduction. So that was made permanent and it was continued from the TCJA. So Congress did continue that one. And another area, it's always been a big area for tax strategy for business owners and investors, is depreciation. And if you're a business owner and you have a need to go purchase equipment or certain types of fixed assets, and you've got a decent amount of income already reported, you're going to be pretty excited that there's still really big depreciation deductions. Now, the question will be, are states going to follow? And a lot of times with depreciation, states don't always follow completely. So we may still have some, we'll say, some surprises with state and local income tax, But at least for federal purposes, we are looking at larger accelerated depreciation. So I'll get detailed here for a minute, but bonus depreciation, for example, it has gone back up to 100%. So for some small business owners, they're going to be able to fully utilize that 100% tax deduction. So for certain businesses, that's really going to drive down your taxable income. But those lower tax rates, they have been made permanent with OB3A, so there's a lot of potential to really either accelerate your income if you want to go ahead and time that out to go ahead and pay extra tax now at these lower rates, or if you want to really try to minimize your tax burden for this upcoming tax season. Now, we've seen a lot of change. We're going to see more as we get more guidance about how this OB3A is going to look on tax forms, and then kind of the nuances and the details for what we as tax preparers are going to be handling for you guys. But lots of strategy, and there are things you can do right now. So it is not the end of the year yet. You absolutely can work on tax strategy. You can look at planning. You can even have pro formas done where you are going to know really close to what your tax liability is going to be next tax season. So you don't have to have surprises, and you don't have to deal with the extra, we'll say, stress and uncertainty of going into a tax season next year with this new tax reform. So tax planning, tax strategy, they are there for you, whether you are an individual taxpayer, you are an investor, or you own a small business. It is absolutely possible to take that uncertainty out and have a good game plan going into next tax season.